the street was estimating. Last couple of minutes, the market has picked up pace.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Okay, well, the wait for 25,000 continues even now, and we are not very far away, 40-50 points away. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Rima and Nigel, and Surabhi will be with us in just a bit as well. Guys, hi, good afternoon.
Hi, afternoon. This has been one of the quietest low volatility sessions that we've had in a while. Pull up that intraday chart in the Nifty or even the mid-cap index. Steady state. The Nifty's moved in less than a 100-point band, and that is about 0.4%. So very, very steady. Just in the last few minutes, you are seeing a little bit of a pickup. So now it's what, 45 points away, Nigel, from that 25,000 mark.
Well, that's right. And we have the swing factor, right? We have the Nifty bank that will play out its monthly expiry today. So expect some volatility to pick up out there. I'll tell you what, the Nifty bank is now down close to around 80 points. If it can move up by close to around 100 points, there's a swing factor of around 180 points. We'll be there at around 25,000 odd. But the heartening aspect today is actually you have plenty of winners on the broader markets. So portfolios will be feeling good. Though if you pull up an advanced decline ratio, at the start of trade, you had more than 4 stocks that were advancing for 1 stock that was declining. Now those 2 lines are very, very close to each other. So telling you that on the losing side as well, there are quite a few names today. But I think the winners are easily outweighing the losers today. Prashant?
Absolutely. So yeah, the 25,000 very much in sight. We almost were there on Monday for all practical purposes. But in any case, Bank Nifty in the red. PSU banks are the ones which are actually leading the losses. So if you look at the Nifty PSU bank index, you'd see what I'm talking about. Private banks are not doing all that bad. And if you want to look at gains and pockets of gains, it is Pharma. As a pack, metals are doing quite okay. And you've got the auto space. So these are the 3 areas where there is gains sectorally speaking. Advanced decline is positive. So it's not a bad-looking screen either, but it is less vibrant in the broader market. I mean, if you just look, yesterday was a really long list of volume-led gainers. Today, it is, it's not as long. The list is not as long, and advances and declines are also more evenly matched, as you can see, as compared to the session that we had yesterday. Lots of earnings are coming through. They have been through the course of the day, and we're expecting a few more, which we will track as we go along. Rima.
Well, the gains pale in comparison to what the global markets have done today. So pull up the Asian markets where Shanghai, Hang Seng up more than about 2%. Nikkei closed up with a gain of 1.5%. Europe is carrying forward the positive momentum. So the CAC is up 1.2%. If you pull up the DAX, that's up close to about 0.6%. So it's green across the Asian market screen. We are awaiting the Fed decision. So in that context, the Indian markets have got a lid kept on themselves below the 25,000 mark. But lots of action in the broader market. The mid-cap index is outperforming today, as we've been pointing out. Names like Torrent Power, Inox Wind, Z Entertainment post their numbers. That's a big mover, 5.5% up. And even on the way down, earnings misses in the form of Indus Stars, Birla Soft catch your attention.
Okay, all right. Well, got that, Rima. Let's get in a view then on how do you trade the index. We're just 30 points away from 25,000 odd. Mitesh is back with us. Mitesh, in the last few minutes, the Nifty bank from being down by 80 points, it's almost flattish now. On the verge of moving to the green, which is taking the Nifty higher. Levels on the Nifty bank?
I think that is the index, in fact, the last 2 weeks, if you look at the Nifty, it's up by about 460 points from a weekly closing to closing basis, while the Bank Nifty actually is down by about 800 points. Very clearly, there's some underperformance happening in the Bank Nifty. For the Bank Nifty to participate, and let's see if any other sector can stand up and, help the Nifty get past 25,000, though the structure for the Nifty remains very, very positive. So in that sense, Nifty is good, but unfortunately, I think the Bank Nifty is not participating, so maybe it will take some time. On the stock side, I have a buy on Steel Authority. Keep a stop at about 148.5. Look for targets of 160. And Inox Wind, I think, that's a stock which has just made a fresh high. So buy here with a stop at about 180 for targets of 200.
Thank you very much for that. Let's talk about Mahindra and Mahindra reported their Q1 numbers. Sonia joins us with the analysis. Sonia.
Well, thanks a lot for that. So, if you look at M&M's numbers, they actually have been a mixed bag this time around. So just want to take you through the key numbers. Decent set of earnings. It was a strong operational performance for M&M. Both the auto as well as the tractor segment margins have improved this time around. In fact, if you look at the auto segment margins, they are up 130 basis points year on year at 9.5%. Tractor segment margins are up 100 basis points year on year at 18.4%. The company has also seen an improvement in their market share. So both in the SUV as well as in the tractor segment, the market share has gone up. Tractor market share has gone up by 180 basis points year on year. SUV market share has gone up by 130 basis points year on year. If you look at the numbers, right, the core numbers have come in with a revenue growth of 12% year on year. EBITDA is up 22%. The margins have come in at 14.9% versus 13.6%, while the net profits are down about 5%. So it's a mixed bag, but largely you'd have to say the operational performance of the company is quite good this time around. Back to you.
Prakash tracks M&M very closely, and he's joining us on the show to talk about the auto numbers and plus the market texture and individual stocks. Prakash, first up on M&M.
So I do agree, the numbers are good. Operationally, we've seen a lot of those things which were not adding up actually improve, especially the farm equipment side. The margins have improved. But, look at where the stock is, Rima, and that's where I want to bring your attention to. It's moved 70% plus already in this year, calendar year. And there's a lot that's happened in the last 6 months which has led to this phenomenal move. Beyond this, the earnings will have to now depend on some more triggers which have to be significant, whether it's new launches, whether it's, they've improved market share in SUVs and farm equipment and all those fronts, including three-wheelers where they've become quite dominant. So these are definitely very promising areas to kind of watch out for. But the stock will need some consolidation and the business will need some consolidation. Once that is done, you'll probably get ready for a new move. But till then, it'll probably be a bit range bound. But it does give the opportunity to make the stock more resilient after these numbers are out.
What about something like a Titagarh Rail, Prakash? Investor favorite, retail shareholders favorite. Stock is up 50% plus year to date. Earnings missed expectations, so perhaps some execution challenges, but revenues were down 1% year on year. What would you do with the stock now?
So that's an interesting pocket that you allude to, because some of these stock names where, the businesses are undergoing a very significant change and expansion of their order books and all, will find this to be the common thread. You will find execution lapses in some quarters. But the way to look at most of these stocks would be from a 3-year, 2 or 3 year kind of a secular trend. And if that is something which you're willing to kind of bet your money on, you'll probably see some of them go into multiples of revenue growth. So it's not going to be incremental 30, 40, 60% kind of revenue growth, but you'll see some multiples happen over the next couple of years, given the huge order book that most of these guys are facing. So I would believe, unless your horizon is that kind of, long tenor thing, it's going to be extremely difficult to be finding more salience in these stocks. In fact, they will go through some profit booking, which can be very significant because they've run up in anticipation of a lot of improvement. But these execution lapses remind people that there is a reality check you need to put to the P multiple expansion that they've undergone. So I would, on this particular name, I would be a bit cautious. I wouldn't want to add at all. But in fact, I would recommend people book profits in this stock and some of these similar ones. Jupiter Wagons. There's so many of them which have done so well, but then the stocks have done far better. They've expanded far better than the business has. So there is some profit booking which makes it very prudent.
Okay. All right. Hi, Prakash. Good afternoon. Good to see you. And Prakash, I wanted your view on a couple of these names, and I'm going to throw a few names, and I'm not sure which ones you track, but Infra, they came out with a set of numbers, and the street clearly is looking ahead. Margins have improved, but the ferrochrome prices are strong. I think you tracked that one as well. And Jamna Auto, that one's making a fresh 52-week high in today's trading session, the CV play. Any view on either of these names? Both of them are up 5 to 7%.
No, so let me take Infra first, because that's something which we really don't get to talk much about. But this entire ferrochrome segment is actually had a belated comeback of sorts in this participation in this leg of the rally. We've seen how Sandur and all also kind of, morph themselves into focusing more on margin growth and not just talking about revenue. Infra also stands to gain tremendously from there. It's a very strong balance sheet. They can probably, continue to do well in spite of ups and downs in that segment. Right now, we're talking about them participating in an upcycle, but it's a stock which will always have very lumpy moves, Nigel, and you know why? Because of the nature of the capital holding structure, the float, and all of that. But from a segment perspective, I think if you are so positive on steel players in any case, whether it's a graphite players which are coming into back into reckoning, I don't see any reason why ferrochrome players will not benefit. There is huge appetite, and I am very positive on the steel sector going forward, at least for the next couple of quarters in terms of a reset. So cement has gone through a reset, is undergoing a reset. Probably steel will also, and most of these players like Impa and Sandur and all will definitely participate.
By the way, it flashes at the bottom of the screen. RBI fit and proper nod for IDBI bank privatization has been received. This is source-based information coming in from our colleague Sapna in Delhi, and she'll join us shortly on the phone line to tell us more. So this is something which markets have been waiting for. Stock starting to move higher, and the entire process in terms of inviting bids, etc., is likely to begin shortly. Of course, I mean, it'll take its time, due diligence, etc. But from a regulatory standpoint, the RBI go-ahead in terms of fit and proper status has come through. So that's the latest on IDBI. Stock was in the negative, and that is moving up as we speak, about a little over 0.5% on the day now in terms of gains. More on this one with Sapna in just a bit, and we'll get Prakash to comment as well. But let's talk about BSE as well. The stock's higher. Actually, BSE, of course, has been higher from the word go. And we've been talking about this, and Vamakshi is joining us. She'll explain. But look at something like an Angel as well. Angel has also recovered from the day's lowest point. Vamakshi, but take it away. Tell us more.
Well, absolutely. As the SEBI cracks down on F&O activity in the market, we have BSE trading higher as against our own expectations earlier this morning. And in fact, here's why. One of the proposal is to allow weekly options only on one benchmark index of the exchange. Now, this could impact NSE more, and that is because NSE option volumes, NSE in fact has 4 weekly index expiries, and the impact on BSE is expected to be limited given that it has only 2 contracts. BSE may see in fact higher volume traction, faster market share gains, and this in turn could limit the volume impact for BSE. So for NSE, the volume impact is pegged at almost 30 to 35% as per IIFL Securities estimates, while for BSE, the impact could be at 20%. The earnings impact is also expected to be higher for NSE because options as a percentage of revenue accounts for 60%, while for BSE it is at almost 40%. The impact on FY26 earnings is also expected to be higher for NSE. IIFL Securities expects an impact of almost 25 to 30% for NSE, while for BSE it is much lower at 15 to 18%. Other than that, we also have a take coming in from Jefferies, and they believe that for BSE, the removal of the BankX weekly contract can impact the EPS by 7 to 9% over FY25 to 27. But the gains for spillover of trading activity from discontinued products could actually offset the EPS impact, and in fact they have highlighted that in the event of moderate industry-wide impact of SEBI measures, there could actually be an EPS upgrade for BSE. Apart from that, lastly, the redirection of funds is an important factor that could also play out. Funds looking at participating in the capital markets theme could actually redirect funds towards BSE, as this is a player that is relatively less impacted as compared to other participants. So overall, those are the reasons why BSE is up and away in the trading session today.
Okay, Vamakshi, got it. Yeah, that makes sense. Explains the kind of 6-7% up move we've had on the BSE, stock, despite the fact that the headline last evening looked really negative. In fact, we spoke with quite a few other experts as well to get to the bottom of this. And one view that's emerging is that actually, if anything, it might push up volumes in the option segment as the lot sizes become bigger and bigger on the futures side. I'm not sure. Prakash, comment on this. Hi, good afternoon. I don't know if that explains the up move on an Angel, Motilal, IIFL Securities. None of the brokers have been scathed at all today. What is your...
So good afternoon, Sukhbir. So I'm not too sure, which we don't know of, and the market has a very strange way of behaving to some of these changes. we've seen what happened when margins that were imposed were high. Everybody thought this would impact volumes, but the contrary happened, right? So we really, it's too early to guess all that. But one thing I can tell you is that the BSE has a huge smattering of some of these micro caps, small caps, which are thinly traded or low float kind of names. That's where a lot of money could possibly shift for people who want that speculative element in their trading. It's not about just options and futures. Somebody could start sensing a huge opportunity in some of these names as well. And when that happens, you'll probably see more brokerage accrual happen rather than what you get in the F&O side. So, there's lots of things, as I said, which could happen. Reason for most of these broking houses to do well is the impact on the derivative side, whatever restrictions happen, is not going to be so difficult for them to not continue growing at the pace because the number of accounts, number of players is growing. So I think that's where, market had given them a little bit of a negative listing look, but now that's kind of playing up against, to the contrary, and that's where the catch-up is happening. But on the BSE, I really don't know how to justify more earnings growth if NSE gets impacted. So it's a little bit of a vexatious issue, but let's wait for the regulations to completely be out.
Okay, all right. Yeah, that could be interesting. I think those who want to speculate will speculate. That's what they say, right? Whether it's horse racing or casinos, and Prakash is saying that if not options, we'll go back to micro caps and in the cash market. Who knows?
One of the best written Jurassic movies, if you remember, there was a line, right? Life will find a way. Money and speculation will find a way. If you want to take off that. The regulators' intentions are, of course, noble and honorable, and they want to, of course, protect retail investors.
Correct.
But adat jab lag gayi hai, it is very difficult. It is extremely difficult. And to sort of, control it in its entirety, and of course, it will have an impact. I think it's also, as Prakash said, it's too early to assess and say, well, nothing will happen. Nothing, impact would have been much lesser if they'd kept all the weekly contracts. But you said, well, everything will expire on one day. Say, all BSE contracts expire on, say, Wednesday, NSE contracts expire on Thursday. That's not what's happening. It's now going to be, there can't be 4 NSE weekly option contracts. There can be only 1. And similarly for the BSE as well. So, in terms of impact, the latter is, what they're proposing is much more, from a market volume perspective, much more impactful as compared to had it been the former. So, the reaction, the stock reactions notwithstanding. In any case, for BSE, yeah, there is, as Vamakshi explained, maybe a little bit of a shift because it was, in a way, a growing player, but still marginal player, with NSE having the lion's share of volumes there. So, more on this, but even broking stocks, everything has corrected quite a bit. So that also perhaps is a function. IDBI Bank is what we want to focus on. As we said earlier, sources telling CNBC-TV18 that the RBI's sort of fit and proper nod for privatization has come through. Sapna is picking this up. She's joining in with quick details. Sapna.
Hi, Prashant. So, absolutely. A few days back, the update was that the RBI's exercise was at a very, very advanced stage, and the Defense Secretary had indicated so, in our panel interviews on the day of the budget. Well, sources are now indicating that the nod has actually come in, and accordingly, the government will now be, initiating the due diligence process for the potential bidders for IDBI Bank. Sometime early August is when the virtual data room will be opened for the IDBI Bank bidders, wherein they'll have access to the draft share purchase agreement that the government will put up for their scrutiny. That's an important document because that will carry all the terms and conditions for the deal to actually go forward. Generally, it so happens that around 3 to 4 odd months is the time taken for the due diligence process to be over, within which, Prashant, a lot of queries do unfold between the potential bidders and the transaction advisor because, the entire deal is done through the TA. The GOI maintains an arm's length. So all of those queries, discussions are likely to be settled. So, keeping a tentative timeline in mind, 100% before the financial year closes, the government will be in the position to, basically call for financial bids. And, that's the update that we have as of now. In case the transaction moves quicker than expected, then it may just be possible that some kind of a closing deal may be feasible by March this year. But as of now, banking on the conservative side, financial bids 100% before the financial year closes. And early August, the due diligence starts by the bidder. So it remains to be seen how much time that really takes, the queries and all of that. So this is it. Basically, the RBI is not for the fit and proper, had been hanging for quite some time. That was widely anticipated, expected. Everybody was waiting for that. That's come through now. So I think the road ahead has become that much easier and closer in terms of the transaction of IDBI bank privatization going forward. Tushar?
Okay, all right, Sapna, thanks very much. We'll look out for that. This has been in the making for a long, long time. One more step forward on the divestment. With that, we'll take a very quick break, come back on the other side, and we'll also have our Alpha Manager of the day with us, Varun Goyal of Mirae Asset Investment Managers, joining in.
Okay, welcome back. We've got Varun Goyal now joining us. He's our Alpha Manager of the Day with the Mirae Asset Managers. Varun, great to have you with us here. Good afternoon. Thanks for your time. Appreciate it. Varun, the hunt for ideas is on. It gives the market gives very little space to do the hunting because we're mostly chasing. What is the team at Mirae doing, and where are you finding opportunities at these levels?
Good afternoon, Prashant. Thanks for having me on the show. I think if you look at the broader earnings, how earnings are placed at this point of time, we are looking at almost 1,000 rupees earnings on Nifty on FY24. You had 10-12% earnings growth for FY25, and then another 10-12% earnings growth on FY26. So we are looking at 1,250 rupees earnings on Nifty for FY26. On that basis, market is trading at almost 19-20 times. So there is no doubt that market is around 8 to 10% more expensive than the historical averages. Having said that, there are still pockets of reasonable valuations in certain sectors. We continue to like the banking and the financial services space. I think both on the lending and the non-lending side, we believe earnings growth will be upwards of 15% for the next 12 to 18 months. We are constructive on IT space, IT and pharma. I think clearly two sectors which look to be coming out from 2 years of consolidation and downturn, and earnings growth should definitely accelerate. I think specifically in IT, we've already seen this quarter that the revenue trajectory is getting better, and I think margins will catch up during the second half of this fiscal. I think as far as pharma space is concerned, clearly the US generic opportunity, which was out of flavor for the last 2 years, we are seeing better margins, better growth, and that should also kind of start contributing meaningfully to earnings. And the domestic formulation story has always been strong. So I think IT, pharma, select banking, select capital marketplace, and some of the discretionary consumption sectors continue to do well. And that is where we are finding incremental opportunities to invest.
Okay, all right. Hi, Varun. Good afternoon, and good to see you win. Wanted some further clarity as well in terms of, you said, I think, pharma as well as IT, and you gave us a little bit insight into IT. Earlier, I recall, you were quite positive on some of these hospital stocks, and some of them have done very, very well. From the healthcare space, what's the call now on the hospital stocks?
Yeah, good afternoon, Nigel. So I think definitely hospitals is a secular growth story. I think as more and more people in India use health insurance, we are going to see more and more people going to tier one healthcare service providers, and therefore hospitals should continue to see better occupancy, better growth. I think we are still looking at only 10-15% formalization in this sector. I think there is a huge way to go, and as such we remain constructive on players, especially on tier 2, tier 3 India, which are expanding on a capital light basis. So I think this theme will continue to do well. I think diagnostics also, we saw significant price wars in the last 2 years. I think things are kind of settling now, and the players which are able to provide a reasonable quality service at a good price should see healthy growth going forward. So both the spaces within the healthcare segment should continue to do well going forward.
Varun, afternoon. Rima here. I remember past conversations where you said that you were cautious on these new age tech companies. But since then, a lot has changed. These companies have sharpened their focus on profitability. There are more companies now coming up in the market. You've got Ola Electric. First Cry is also planning to go public very soon. Would you be looking at any of these new age tech companies now?
Yeah, good afternoon, Rima. So I think we are definitely looking at companies where we see profitability is around the corner. There are some companies which are seeing significant improvement in operating metrics in the last 6 to 12 months. I think some of those names should see better traction in both profitability, EBITDA margins, and volume growth. However, I would personally still be careful about those companies which are very far away from profitability, and the valuations still continue to be a challenge in several of these stocks. So it's really a pick and choose kind of a thing as far as this space is concerned.
Okay, got that. By the way, just want to point out that we've got two high-flying PSU stocks which came out with numbers. Now, the quarterly numbers are not very high-flying. Of course, the usual caveat applies. These are companies on the capital goods side, long gestation projects, etc. But anyway, for what it's worth, look at RITES. The margin has come down a lot. From nearly 30%, it's down to about 22%. Stock obviously sold off the moment those numbers came in. The profit is down about 25%. Revenue itself is down about 11%, and both, of course, EBITDA and EBITDA margins have compressed. So, right, it's not looking too great. Come to BHEL, still got losses here going, like last year. Losses at the net level, losses at the EBITDA level as well. So, that situation hasn't really improved. Top line is up about 10%. So, the question really is that with the market so excited on these names, how do you sort of deal with some of these disappointments that come along the way with respect to earnings? Varun, hi. What is your stance? PSU stocks, and this is the thing. We always talk about execution, whether earnings will be as consistent as the growth in stock prices. What's your take, and what is the position you're taking on these stocks?
So I think as far as capital goods space is concerned, there is no doubt that we are in the midst of a capex cycle. I think be it private capex, either in terms of residential property or PSU capex, central government capex, we are seeing very strong traction. However, valuations in some of these spaces seem to have run up quite a bit, and valuation is clearly a challenge. In our view, power is clearly a space which stands out in terms of very strong and ambitious plans for the next 5-6 years. India hasn't really added a lot of thermal capacity in the last, I think, decade, and therefore there will be some catch-up. We also need that to kind of balance the renewable energy. So power generation, power transmission will continue to be a space which will see good growth. So we'll really pick and choose in terms of players which are available at a reasonable valuation. I would be more careful about the railway and the defense sectors where valuations seem to have grown manifold. I think defense, while there is clear runway for growth, I think next 4 or 5 years we are going to see strong improvement in growth both on top line and bottom line because of the huge export opportunity. But the valuations seem to have kind of gone too high, and therefore one needs to be a little more careful as far as some of these pockets are concerned.
By the way, across the sort of market cap curve, we talked about many sectors, etc., that you like. Are you tilting more and more towards large caps naturally, I mean, organically, because of valuations?
Yeah, so I think broadly from a valuation point of view, there is no denying that as a whole at aggregate level, large caps are cheaper than the small and the mid cap space. However, one has to keep in mind that there are certain themes and sectors which are not available in the large cap space. And therefore, we believe some of those themes which are there in mid and small cap will continue to do well because the growth runway seems to be much larger. But having said that, yes, broadly, I think large cap space is definitely cheaper, and that is where we are beginning to find more new ideas as compared to the mid and the small cap space.
Okay. All right, Varun, we will leave it on that note for today. Thank you very much for joining in. Good to get your perspective on the market. Well, earnings season in full bloom, so we're looking at some more interesting numbers. And the one that really catches your eye, probably the stock of the day from the earnings standpoint, has to be Torrent Power. What a move on the stock. It's been up steady, 15-16% right throughout the session. Let's get the stock up on the screen. And the numbers have been looking very, very good, right from top down. I mean, revenue down. Perhaps you can't find fault. Let's bring in Vivek to understand what's really gone behind these numbers and what the story is over here. Vivek.
Well, absolutely right. Continues to hold quite strong in today's trading session after a strong Q1. Now, one important aspect to keep in mind is the fact that the company's two gas-powered plants in this particular quarter actually operated under Section 11, that is the Emergency Act, and on the back of that saw increased sales contribution and also saw much higher plant load factors, that is PLF. Now, what actually aided? Strong merchant sales aided, and the spread to improve quite significantly, and power demand, like we've been reporting, was very strong. On the back of that, revenues higher by 23%, EBITDA higher by almost 57%, margins higher by 400 basis points, and profitability higher by 87%. The key point to note, look at the PLFs. Thermal PLFs coming in at 60.4 versus 39.6 on a year-on-year basis. Now, the company did hold a conference call late last evening. They've also given strong guidance as far as capex is concerned. So, license distribution, the company intends to do capex of close to 1750 crore this year. Franchise distribution close to 25,000 crore. Also looking to add almost 3 gigawatt worth of renewable asset, for which the company will be looking to spend close to 18,000 crore over the next 3 years, and also 2 transmission assets that the company is looking at, that is close to 1,270 crore. The company also hinted that they are looking at inorganic acquisitions. Morgan Stanley has written a note. They believe that AT&C losses that the company actually saw, that is the aggregate technical losses that the company saw in this particular quarter, could be reversed Q2 onwards, and they believe that the beat that the company gave in terms of its results versus Morgan Stanley friendly expectations was largely driven by higher merchant profits. So on the back of that strong set of results, aided by plants operating under Section 11 and strong merchant lanes, is something that's led to the strong move as far as Torrent Power is concerned.
Thank you for that. We will slip into a very short break. As always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our experts.
Welcome back. Well, a couple of banking names have moved higher. Kotak Mahindra Bank, that's moved into the green. Remember, we have the monthly expiry that's playing out. So that's one stock. And the other one that's cutting its losses is IndusInd Bank. It was down close to around 0.5% at the start of the show. It's on the verge of moving to the green. So keep an eye out on a couple of those names. Good time to go to D Street Chatter, though. Nimesh joins us to fill us in with what he's picking up. Nimesh, how are things today?
Well, the momentum continues, right? Again, we are closer to that 25,000 level of key resistance. So need to see whether we again pull back from those levels. But again, I've been saying this for a while now. That this rally is largely backed by FI buying, the domestic buying. Looks like the mutual funds are redeploying the cash that they're sitting on. and that's the reason we're seeing that outperformance. Today, today the broader market stands out, and I'm saying this because there are at least multiple, FIDs where there is basket selling in the broader market stock, especially the cash names, and even then, the mid-cap index is up more than 0.5%. A lot of stocks are buzzing into it. So, that shows that the supply is getting absorbed by domestic mutual funds and the supply from the retail side. So that's been the key trend on why we've been, rallying higher. And, again, from a positioning point of view, I guess the consensus is on the other side. Everybody's waiting for a correction, and maybe that's why the market is not obliging with a sharper cut. But from a flow perspective, it's the domestic mutual funds who are observing all the liquidity on the sell side.
Well, and what's good to see, Nimesh, is that 1 week post the budget, actually the mid and the small caps is a lot more interest. So
and they've actually outperformed.
That's good to see. But tell us, what are you picking up in individual news flow?
Okay, so in terms of individual names, the first stock is Polycab. That stock is buzzing into it on large volumes as well. Some bit of FI interest is back as well. And the city is now anticipating some corporate development, including a large order win for the company very soon. So that's Polycab. The second name is Hindalco. Within the metal names today, that stands out purely on back of buying interest. So there are buy flows. Additionally, DAM Capital today put out an initiating report on the stock with a buy rating and a potential 37% upside even from current levels. So I guess they're the most aggressive on the street now. The third stock is Jupiter Wagons. While the stock has been consolidating, there is an indication that there will be a large block in Jupiter Wagons very soon. Remember, the company really recently had raised money via QIP as well. And the last is Zydus Life. Even that stock is buzzing largely on the back of buy flows. But again, Zydus, for a reason, is also buzzing because it's a potential candidate for MSCI inclusion, which will come in August. So maybe that explains a bit of outperformance in this month itself in Zydus Life.
Okay, well, lots happening there and lots of stocks as well. Nimesh, another stock which is buzzing is Trent. I think it's been buzzing for the last 3-4 days now. Anything you're picking up?
Well, Prashant, it was part of my charter list a few days back. The reason why Trent is buzzing into today is because today is the cutoff date for a possible inclusion into Nifty. So there were some, alternative research who have done some calculations, and they were expecting Trent to be part of Nifty now. And in terms of exit, maybe Divis can move out, or maybe L&T Mindtree can move out. So I guess that explains the reason why Trent has been outperforming in the last few days.
Okay, all right, Nimesh, thanks very much for that. We'll keep an eye. Well, Mitesh is now joining us with the quick trading ideas. Mitesh, what do you have?
So, Piramal Enterprises, I think, is one on the list, making a fresh high. PL is a buy with a stop below levels of 1,020 and a target of 1,080 can be looked at. So, it's not a BTS, it's more of a positional kind of a buy. And STBT on HAL, it's still looking weak. I think, extremely overbought, trying to come out of that. So take a stop at about 49.60 here and look for targets of 48.70.
Okay, STBT, sell to buy back tomorrow. Thanks very much, Mitesh, for that. Well, tomorrow we get into August, which means that, we'll get the sales numbers from the auto sector for the month of July. Sonia is here with what expectations are looking like. Sonia.
Well, thanks a lot for that. It's a mixed bag expected this time around in the month of July. So the passenger vehicle sales continue to see slower growth this time. The PV demand trends remain weak. The inventory levels are quite high at the moment at about 40 days. Two-wheeler sales, though, have seen a pickup in the month of July. The two-wheeler industry wholesales are up by about 12% year-on-year. That's driven by strong growth coming in from both Honda and Bajaj Auto. While we are expecting a gradual recovery in the medium and heavy commercial vehicle segment due to higher spending from the government. If you look at what Nomura's expectations are for Ashok Leyland, let's start with that. Flat move expected on a year-on-year basis. Bajaj Auto expected to see about a 9% year-on-year growth. Eicher Motors Royal Enfield sales are expected to fall by about 2%, while Hero MotoCorp total sales are expected to grow by just about 2%. Finally, Maruti Suzuki total sales expected to fall by about 2%. So all in all, expected to be a mixed bag this time around. Back to you.
Okay, all right, Sonia, thanks very much. So we'll watch out for those numbers. Let's see how they look. Speaking of numbers, it's going to be all about the big giant from the ferrous space. Tata Steel will be reporting earnings today. Nigel, what are we going with? What's the expectation?
Well, in terms of Tata Steel, you just keep an eye on the operational performance because the bottom line, normally it's all over the place because of Forex, exceptional items. So in terms of the consolidated numbers, top line, there'll be a bit of degrowth because steel prices have been a little bit under pressure. The EBITDA number, though, will grow by close to around 22%, which is telling you that the consolidated margins will improve. But as I said, it's all about the geographic breakup. And in terms of volumes, yes, we already have the volumes with us. So in quarter one, we have a mild growth if you compare it on a year-on-year basis. Sequential basis is a bit of a degrowth, but that's because of a seasonal factor. Looking at the European business, the Netherlands business has been a good recovery. They had, a couple of months where there was work going on at those furnaces, and that's come back on stream. So Netherlands will recover. Remember, Netherlands is the profitable part of the business. The UK business volumes will be more or less flattish as they're phasing out the business out there. The two key numbers that you'll be tracking. The Tata Steel standalone EBITDA number should be around 13,450. Very, very important, the key number to track out there. Realizations have been tepid, but they'll get some benefit because coking coal cost will be down roughly around $20 on a per ton basis. Tata Steel's Europe business, that's going to be important because the losses have been going on for the last few quarters. But the hope is that, there'll be a sharp reduction in terms of a EBITDA per ton loss. And the number that we have come up with is around $36 per ton. How is that possible? The Netherlands business has moved, will move into the green because operating leverage has played out, while the UK business will continue to struggle. So the reason that Europe reports a loss is because of the UK business. As always, commentary on pricing, demand, the debt reduction plans as well as expansion, that's something we'll wait to hear from the management. Going to keep me late this evening, but I expect the numbers by around 6 to around 7 p.m. today. Back to you.
Okay, enjoy your evening with your eyes on BSE waiting for Tata Steel numbers. But let's talk about Z that's surging in trade after the Q1 numbers. Vamakshi joins in with the first cut. Vamakshi.
Well, absolutely. It's a very strong set for Z. The revenue has seen a modest beat, but it's the operational performance for the company that is actually driving the beat. When I look at the domestic advertising revenue, it is down nearly 3.1%. It has come in nearly 5% lower as compared to estimates. And this quarter saw an impact from cricket as well as the general election. But the subscription revenue growth is largely being driven by a pickup in linear subscription revenue post NTO 3.0 and Z5. The subscription revenue on a YOY basis is up nearly 8.8% and has come in nearly 2% higher as compared to estimates. But it is the other services, other as well as services segment that is actually seeing a sharp jump. Keep in mind that this is largely their movie division, and the base quarter had no movies, and therefore we're seeing a nearly 70.4% surge in that particular segment. EBITDA has come in at 270.56 crores. This is 22% higher as compared to the street expectations. EBITDA margin at 12.7% is also at a multi-quarter high. It has come in nearly 220 basis points higher than estimates, and the net profit at 118.1 crores is nearly 22% higher as compared to estimates. The management has also shared an outlook in the presentation. They expect gradual margin improvement that we are seeing to continue through the rest of the year. The magnitude of the margin improvement will, however, be dependent on how the ad revenue picks up in the second half of the year. But overall, they expect FY25 margins to be better as compared to FY24, and in FY26, in fact, they're expecting to deliver industry-leading 18 to 20% EBITDA margin. So overall, they've shared a good outlook as far as the margin is concerned. They've reported a good set of numbers in the first quarter. We will be waiting for the management commentary that comes through in the call today.
Absolutely. It's not bad at all, considering all the twists and turns in the Z story. And as Vamakshi is pointing out, and by the way, it's quite telling. The advertising revenue at 911 crores and subscription revenue is now almost touching 1,000 crores. It's telling you how the business itself has perhaps come of age over the last many months and quarters, with the subscription numbers actually looking better than advertising. That used to be the bread and butter for any media company. So changing times. Anyway, let's take a quick break on that note. Come back with more on the markets in just a bit.
Welcome back. Well, let's focus on Godfrey Phillips. Now, that's the stock in focus. A Delhi court has lifted injunction on the company to maintain status quo with regard to its retail business. Ashmit joins us to fill us in with what the court had to say, and then we go across to Mangalam for a quick analysis. Ashmit, you first.
Well, there's clearly a boardroom battle that's currently underway at Godfrey Phillips, and that's between Beena Modi and Samir Modi. Beena Modi being the managing director, Samir Modi being a director on the board of Godfrey Phillips. Now, let's bear in mind that in the month of June, a Delhi court had granted an ex parte injunction whereby direction had been issued to Godfrey Phillips twofold. Number one, that status quo had to be maintained with respect to Samir Modi's position as a director, and number two, status quo having to be maintained with respect to the retail business under the umbrella of 24/7. Now, what's important is that the Delhi High Court has vacated that interim stay. There are two aspects to bear in mind. Number one, first, with respect to Samir Modi's position as a director. Here, the Delhi court has held that he is not entitled to continue on the board of Godfrey Phillips. However, at the same time, the Delhi court saying that as per the succession trust deed between the various stakeholders, Beena Modi is required to recommend Samir Modi as a director, and then subsequently, as per the provisions of Companies Act, he can be considered, and Godfrey Phillips can take an independent call. That's the first part of the stay that has been vacated. As far as the retail business is concerned, again, the Delhi High Court has very explicitly held that as far as Godfrey Phillips is concerned, it is an independent entity, it is a listed company, and no such compulsion can be put on the company for continuing with the retail business. That is a decision that the company will have to take on its own merit, that whether or not it chooses to continue with the retail business is an independent call that the listed company is required to take. There can be no court injunction with that respect. So with that respect, Delhi court vacating the interim stay, the interim injunction on two counts, one on Samir Modi's position as a director, two on continuing with the retail business. That's a decision that the company will now have to take.
Okay, thank you very much for that. Mangalam is also joining in with some more information on this. Mangalam.
Well, as Ashmit pointed out, it's the retail business which the company has decided to exit now. The retail business was that of 24/7. In fact, in last year, it's
Phillips in the news. Thanks very much, Mangalam, for explaining that to us. By the way, those are important flashes on the screen as well. Now, we know the hue and cry that's been doing the rounds ever since the budget took away indexation when it comes to calculation of capital gains tax on property. Remember, the tax itself has now come down from 20% to 12.5%, but the new regime doesn't give the benefit of indexation to properties after 2001. TIMSI is picking up the latest on this. A lot of buzz around it, TIMSI. So it seems representations are being made as well. What is the latest?
Well, yes, as you said, a lot of buzz around it, and a lot of representations have come into North Block to the top government. And what we are given to understand from sources is that the government is currently mulling over these representations that it has received on the budget proposal, as you rightly mentioned, to do away with the indexation benefit with a lowered tax, that is the long-term capital gains, of 12.5% instead of earlier's 20% with indexation. Now, some of the representations that are being sent include to have a dual regime, let people decide the way we decide in our personal income tax. Similarly, representations suggest that let people decide whether they want to take the indexation benefit with a 20% LTCG, or they want to do away with the indexation benefit with a 12.5% LTCG. Another representation is to see whether that this indexation benefit can be extended to the properties that have been bought till July 2024, and after that this benefit should go away. Now, these are some of the representations, and as we speak, no clarity is there as of now whether changes will be made. These representations, remember, are being studied just to see to how the best the impact can be allied for this particular proposal that has been announced in the budget, but no decision has been taken as yet. And we've also sent formal queries to Finance Ministry, and we are waiting for responses. Till now they remain unanswered. But yes, representations flowing into North Block, and North Block is trying to see how best these representations should be taken forward. Whether they need to be taken forward or not, even that is not decided as yet.
Okay, thank you very much for that. That's the last word on this perhaps has not been said as of now, and the uncertainty may just prevail on real estate taxation. Maruti looks like a very strong set of Q1 numbers. Beat in revenue, beat in margins, and a beat in profitability. So it's a top-down beat. The company's top line has gone up by nearly 10% on a year-on-year basis, ahead of street expectations of 7%. On the margin, there is a near 350 basis points margin expansion. Margins at 12.7% compared with 9.2% year-on-year and much higher than the street poll. Look at the bottom line. Given there is a 10% increase in the revenues, about a 350 basis points margin expansion, the profits for the company have gone up by 45-50%. So very strong set of numbers. The stock is shot up 2.5% like a rocket. It's anyway up 25% since the beginning of this calendar year, and now it's added on some more heft. Sudeep Bandyopadhyay is also with us now. Sudeep, come in on Maruti and the early numbers.
Well, I think it's a fantastic set of numbers. We didn't expect this kind of a show from Maruti in this quarter. I think it shows the resilience of the company. And also, we'll have to keep watching the space. I need to see the details of their export numbers and things like that. Of course, the monthly numbers will come tomorrow and we'll wait for that. But by and large, I think it shows that probably at some level, I think the efficiencies are improving, enabling the company to post better than expected margins.
Okay, well, we just have very little time before the day starts going out. So very quickly, I'll give you an open field. We've had some very strong result reactions today on the upside. There is Torrent Power. Then we had Rights with a disappointment. There's Johnson Hitachi, which has reacted sharply lower. Many mid caps. Give us one or two names that stand out. Any thoughts? Any new ideas?
Well, I think, there's one idea which I've been telling again and again is that, one needs to be a little careful about the PSU's operational performance. And that's pretty much getting reflected in the results of Rights, BHEL, and the likes. Order book and building a long order pipeline is one thing. Executing and delivering performance is something else. And some of these PSUs, unfortunately, have have a very patchy track record. And BHEL is definitely one of them. So, time and again, I have been advising investors to be really careful and not to get swayed by just the order wins. We'll have to wait and watch. I think the valuations are at a level where the margin of error is very, very limited. So that's pretty much what it is. I think, on the positive side, there are lots of things, but the time is short. We can discuss that in the other segment.
Okay, well, let's do that. Stay with us, Sudeep. Thank you for joining us for now. Appreciate you sort of taking out the time as always. We're up 100 points, so very, very close now once again to 25,000 as we wrap up today's session. So just what 20 points away, 24,980. I mean, this if you can have the small cap intraday, there was a sell-off. There was a sharp sell-off from the high point of the day today, from about 2 o'clock basically. But then towards the end, there was a bit of a recovery there as well. But the small cap index ends about 1/3% lower. And I think that is the reason why a market breadth was positive but close. Mid-cap index ends about 0.5% higher. And I think the Nifty Bank ends about 0.25% up as well. So Nifty Bank was in the red when we started, a closing bell at 2:30. But there was a recovery there. And of course, Nifty moved on as well along because of the help from banks mainly. So that's the day. Not a bad session at all. Lots of movers, lots of shakers, lots of results. And of course, the market inching once again, very, very close to 25,000. So, Fed later today, global markets, all of that. And tomorrow morning, maybe we start at that 25,000 level. And we sort of are, we'll see if that does indeed happen. So 3 days now, market's been kind of treading water around those levels. It's a wrap on this edition, a closing bell from all of us here. It's goodbye, but markets forward will pick up on all the action in just a bit.